You guys have been asking some questions about playing both sides of a trigger, key levels, and choppy market, how to know when to scale, risk management, stuff like that in a choppy market as opposed to a normal trend market. That's pretty cool. Something I'll break down a little bit, and then I'm also going to go over how I use unusual whales intraday to kind of look at which side of flow is tending towards, match it up with key levels, and see which way we can play. First thing first, I'm going to talk a little bit about chop or sideways days in the market, and then trend days. So basically, a sideways day or a chop day is going to be a day where we have little of a trading range compared to normal. So today, as of now, is definitely a chop, or it's also an inside day, but it's more of a sideways day. So we have these ranges, right? And they just keep getting chopped up and down at these ranges. And then a trend day is going to be a day where either the buyer or the seller is in control. This would be a seller trend day, buyer trend day. On trend days, we often are able to make more money because that side is in control, and most tickers do run off of the overall market trend, which is SPY. So one thing I always do is I always have SPY open when I'm trading. It helps me to know when, where, and also helping with certain entry points. The only thing that really changes for me personally on sideways or a choppy day is I enter positions smaller. My positioning size is smaller, and I also take profits almost the moment I see green, right? So about 10%. I usually scale at that 10%, and I scale almost half, 3/4 of my position size just to lock that in, and then I set a hard stop of 5 to 10% depending on my entry point. Entries aren't exactly my strong suit at the moment, so that's something I'm working on for sure. But being able to do that, it limits our risk as well. And then another key thing on that is I enter on chop days like this. I enter in only on the retest. Why? Because it reduces our risk a little bit, right? So basically, I'm going to use Uber for an example here. So I have this a little bit written out, what I personally did. This is the only ticker I traded today. Played both the up and the downside, right? So off the initial 15 minutes here, I have this put trigger 37.05 and two possible targets, right? So right here, I play this. Originally, we get the break, and then it's sold back down. And then we get this retest. This is where I enter into my puts in order, I think it's a very good risk to reward scenario, right? And then we get this close underneath the VWAP, which confirms this, so I'm very confident in this. And then another kill candle, which is very good, but buyers did step in, so I was fully out after this, knowing that Fed was talking today, and this could be very volatile in both directions. And then after that, so I see this, I'm just kind of waiting it out. But these buyers are stepping in, something I noticed, and it's another support level, right? So let it go, whatever. And then right here, I waited for this candle right here. See these buyers step in again at this level, and I bought calls here. I got a little bit nervous here, I'm not going to lie, because we did fall a little bit below this level, but then we're here. And this is where I was fully out. I didn't scale in or out here, just because this was getting up close to that 37.05 original put trigger. So I scaled here, took my profits there about 15-20%, something like that. I think 25 at the highest, which is okay because I did miss a little bit of move. That's all right, but I took profits and I stayed green. That was the most important part to me. What I like the most about options is we can play both sides, right? So this was originally a put trigger, right? And this was originally a support down below, which was a price target for the put trigger. So on this, I was able to play these puts off of the original put trigger, nice. But I was able to play calls off of this support, which is very nice, right? And that's why I love options. We can play both ways, and it only takes one ticker to get that 25, 50% of your account in one day, even, you know, granted it's a trend day, stuff like that. But that's very nice, very easy, and can help us a lot. One thing to keep in mind when playing, you know, the opposite, say, let's see, say this was a call trigger up here, and we're going to play puts, right? So we're going to wait for this confirmation here. I like this double retest and then a breakdown, right? That's nice. This candle right here is shooting star. It's something I'd enter in 9 times out of 10 into puts, especially if it's at this resistance level. Usually it tends to be a pretty good indicator that we can play down. So that's something that also to keep in mind when playing the opposite way. On the contrary, let's see, this right here, if this were to be a put level, right, we have this bullish engulfing hammerish long wick candle, right? This would be a good spot to enter because we have these buyers stepping up and pushing it all the way up, and then we can scale up around here once we see these sellers step in, which even just that 5-10 minutes is a 10 to 20% move depending on your entry point, which is definitely nice. So that's cool. One thing I do recommend for day trading is including your VWAP in here. I'm not really a fan of indicators, right? But VWAP does help, and a lot of times it's often support and resistance. So that's definitely nice to keep in mind. Helps us trade as well. The next thing I'm going to do is show how I use unusual whales intraday to help with conviction, stuff like that. So one thing I do is I just put in my watch list tickers right over here. I put the premium range to 500. I don't really want to see all of the very small ones, but I do want to see most of the trades. And this is just at first, right? So I just want to see where things are going. Both bid and ask, selected calls and puts, 0 to 14 day expiration, volume, strike range, that's cool. 0 to 1 volume, that's all right, that's all right. I exclude deep in the money, and I keep OTM only, to day trades only. And then once I see, so for example, I'm going to use NEO here. For example, I have this kind of, I did not trade NEO today, but if you did, you could have made a lot of money, especially on the put side. That's pretty crazy. But anyways, so what I do, you know, I use these key levels first, right? So I have this retest of the put trigger, cool. But then I hop over to this flow, and let's see, go here. Oops, that's not one. I go to intraday analysts, and I'm just going to use NEO. That's cool. And then look, as we can see here, we got this NEO chain. The highest one's this 30 put right now. So that can show us, you know, where it's going, stuff like that, which is really cool. Is we can click on these chains, right? And we can, oh, here we go. All right, we can see how these people are trading these. And if it's, say it's a chain that I'm in, right, I'll use this just to look kind of where it's going. But the key thing is here, we need to match this up with our key levels. The key levels are definitely going to be something that's very important, because to me, support and resistance is the most important thing. But when we couple this with the flow, we can see the sentiment, right? That's very important because it tends to show the sentiment of SPY as well, which is really nice. And then we can look, you know, you can set in bigger things in here. But we have a 3K premium here, 6K, which was sold actually. You know, some bigger trades in here, which is nice to see. And we can use this to help confirm kind of what we want to enter as well. And we can also use this flow thing for the highest OI increases, which are going to be volume increases, OI, you know, stuff like that. People are getting more intrigued, which is pretty intriguing to me as well. And some keys for me are always keeping SPY open when I'm trading. This is only on a single monitor right now, just because it's easier to record, show you guys a little bit easier. So I always keep SPY open intraday. I also always have the 15 and hourly support and resistances marked, and then keep in mind the sentiment of SPY. So right now we see it's caught in between these two zones at 465 and 454, 455 area, but it is bouncing off the VWAP on the daily, which is nice. But so we can see here that it's actually in a short-term downtrend, but overall it's obviously in an uptrend. So that's something to keep in mind when trading, that most times when it's a day like this and a downtrend, puts are going to be more favorable. But of course, we always respond to price action, and that helps us more than anything using the key levels. So that's something that's definitely cool. Couple that with the flow and the VPA, and you have a pretty decent system that can help you stay consistent and do some crazy things. And that's big, but always remember to take profits, especially on these choppy days. Especially, when the Fed's speaking, we know it's going to be choppy. So we want to take those gains right away, and set our stop. Once that we do have the green, set our stop even, or our stop loss at break even. And that will help with no losses. Even if ends up turning out to be a bigger gain in the end of the day, at least we respected our system. And I think that's more important than the greens and reds. Once you start trusting your system, start processing it, learning it, then that's when you see the consistency. Even if it is those 10 to 15%, those add up, right? So that's very important to do, and to remember.